Once again, good evening, everyone. Welcome to tonight's webinar. My name is Nixon from CGS-CIMB, and I'll be your host for tonight. Tonight, we'll be having our charting market series from the Learn from the Pros series of educational webinar. And tonight, Weiren, our CMT market strategist from CGS-CIMB, will be sharing with us a lot more about technical analysis and the outlook of the market. Allow me to just share a bit about the Learn from the Pros. This is a series of educational webinar that we are bringing to you for free in this year, 2023. So it's actually the third year running. And we have lined up 3 market experts to share with you all their market expertise. We had Ho Seng Fu, who had done a series of a 4-session workshop in September. His session is actually already completed. So those who have attended the session, I think you took a lot of materials away. Those who have not, maybe look forward to look out for it when we do it next year. And of course, we have Kong Hao. Kong Hao session he'll be doing a second session next month. Sorry, it's this month, 30th November. So do look out for that. I will share his registration link here, hold on, so that you guys can register directly as well if you choose to. Or alternatively, of course, you can take a screenshot of the QR code and you can then just register by the QR code. Hold on, let me get my chat box up. Okay, so Kong Hao session is in the chat box. And of course, tonight we will be having Weiren. Weiren, this is his 3rd session this year, and he'll be sharing with us a bit more about the technical analysis. I have a brief chat with him just before the session, and he'll be covering a very interesting topic tonight, Elliott wave. So I'm looking forward to hear more from him about that, and of course about his insight as well as stock picks. Before we go further, allow me to just share the disclaimer. So as all of you know, whatever we present here is for educational purposes only. It is not a recommendation to buy or trade. If you do intend to take position, do check with your licensed broker or financial advisor. So with that out of the way, I'd like to welcome Weiren. Weiren is the CMT market research analyst from CGS-CIMB Research. He has done many training and webinar, and he's also will be doing a SGX webinar later on, which we'll be sharing with you as well. So if that out of the way, I'll just pass the stage to Weiren. Weiren, please go ahead.
Hi, good evening, everyone, and thank you, Nixon, for your kind introduction as well. I believe that most of you are familiar with me already. I think there are so many of you today, so I'm really grateful for taking your time on Thursday evening. And I know that now is currently the holiday season, and most of you have already brought your kids to holidays or maybe in December. But today, other than what I'm going to share about the macro environment, I also add in some element. Sorry, just recovered from a flu, a week or long of flu. So in between there might be some cough, so I seek your patience on this. But just allow me to get back. So I'll be doing more of the series on this, and then like what Nixon has shared, I'll be having one event with SGX, same event on Elliott wave. But that one will be solely on Elliott wave. All right, so I'll be on top of this. So if you are interested, I think Nixon will give you more of the details. Or towards the end of session, you can approach me to do it. Also, this is my first time doing Elliott wave as well. So I mean what I mean by first time doing is teaching or introducing this concept on the market itself. So I'm still fine-tuning my way of delivering this concept and methodology. I have my own new finding after during my course of taking the chartership at CMT. which is the Chartered Market Technicians Association from the US, New York, specifically. So I do have some interesting, and then how to make it in the systematic and approach on this, or to make it more simple and rather than subjective and being complex. A lot of people just have a feedback that wave is very much very hard to understand. But I do have a systematic approach, and this lies with the rules and certain things, certain concept I add in. All right. So without further ado, I just continue. So looking at this, I think last session in the month of October, I believe it was 13th of October, mid-October, exactly a month ago. I shared that I'm still bullish on the US market despite there's been a downside on this. All right, so but right now, I think that the bulls have come back, and I use the wave theory as expected. Like if you can recall that I used simplicity of wave theory to actually chart the Dow Jones Industrial Average, and it did came out on pass. So later I'm going to go through all this after going straight on the rules. So today I won't go through much on the global macro environment, but there's one thing I need to add on it is the US and China relationship. So this is one thing, and then bull is the bull back in Q4, I think it is, but likely to be a corrective bull, so we got to be very careful on this. And then lastly, I think I'll skip the using a transporter, but I will use this. I will go straight into Q&A if I finish my session. You got any stocks that you want me to go through, I can use wave theory on the spot to share with you all. So today, I know that online is a bit difficult to do interaction, but later on, I hope when I ask a question or something, most of you can verbally participate in it. So I look forward to this, and I shall carry on. All right, so this is the same thing. I think inflation is now at 3.2%. I think the core CPI is still at around 4.7%. So nothing much has changed. I think the Fed, I think the market is overjoyed by this good news of this better than expected inflation report. But I think the market is a bit short term on a bit myopic and short term on this. Why is it so? Because you must remember that the Fed inflation target is at 2%. Though inflation do seem to be peaked and then has seen a very clear downtrend, but I think that the market rally that based on this how do you call it or based on this so-called celebrated inflation inflationary trend, we got to look at this from a very far long lenses. I think Federal Reserve is unlikely to cut rate. The tone of the Fed, although the media say it's a bit hawkish, but I think that I do share the same thing with the media. I think based on what I have studied from Jerome Powell, based on his tone, based on his the delivery of the result during FOMC, he seems to be approaching a cautious approach, so that he's not academic like Janet Yellen, Ben Bernanke, and maybe Alan Greenspan. He's more of like a person that will take tough decision on this. Two, and he is very focused on two things: inflation and the unemployment rate. All right, unemployment rate, no doubt, I think still hovering at it has a very good reading, 3.7, 3.8%, still below a 4% natural rate of employment. So for that, I think that unemployment, even there's a rise in unemployment claim, there's a slight thing unemployment is a good news to the facts. All right, but will they do a rate cut that soon? I doubt so. So I will say this throughout why it's not. There are things that three things. All right, flat inflation target is still at 2%. Oil prices still looking tame at $75 per barrel, but it's still higher. All right, $65 is like the median price for the crude oil prices, but is the volatility, and based on technicals, I think though it's now on a downtrend, there's a chance that it might rally back to a $90. I might guess after December, there's a chance that it might go back up onto the $90. All right, but there's one thing that I always mention. I don't know if you remember. Is the first thing is supply chain effect. I mean the COVID lockdown, and this is going to have spiral effect. One thing that causes inflation, yes, QE and the federal quantitative easing is causing it. But I'll say I will account based on my own judgment, account for 30%. The rest of 70% is due to external factor, exogenous factor, economic factor, supply chain factor. All right, so this is what I want to share. So I can just take out this point and then do your own judgment and your own studies. All right. So this was my conclusion. All right. Rate is likely to maintain at 5.5% to 5.75%. 6% will go, maybe or maybe not. Rate cut is likely to be next year, Q3 2024. We can infer from this from 2019 Q3 period last year. Later I will chart, which is this chart. All right, so if you can look at for my chart, if you still remember, I think this is 4 years ago. I think when rate, the Fed rate was around 2%, 2.5%, was quite close to the inflation rate. So there was some pausing of rate. I think it's in June, and then September onwards, it start to have a cut. And then you have 3 rate cut, and then once it goes into the first month of 2020, it has an aggressive rate cut all the way down. All right, so remember I shared something that I posed this question: will rate cut be good for the equities market or not? Chances are, my theory is rate cut is for no reason is bad for the equities market, and I'll show you the chart before and why is it bad to do so. All right, so if you remember this, do give me a sound or give me a 1 or something. All right, so you can see the aggressive rate cut during the COVID pandemic, and then there's a spike in the money market. All right, the money the M2 money. So there's a shock in supply, and then some cut, and then I think mid 2022, early 2022, it start to reintroduce back the QE back to the market. So there are still much money supply in the market as well. All right, so another thing that's going to affect this will be a positive news is they cut the yesterday. Today is Thursday. I'll say yesterday yesterday night when Xi Jinping and Biden finally meet in San Francisco. All right, so why this improvement in the U.S.-China relationship is likely to improve, and this will bring the Chinese economy out of the bottoming out phase. And there are also a few factors I would like to share on the Chinese market as well. First thing, I think if you all know that China in recent months, I think since the start after I think if I'm not wrong, it's in August, it has really stopped its toned down its war policy. In Chinese it's called 战狼. So you know who is Wu Jing? Wu Jing got this famous movie called 战狼. It's about the special force in China that perform heroic act around the world. It's like maybe how the Expendables Chinese version, or you can say that Taken or Chinese version of this Liam Neeson film or Taken. All right, so why China recently toned down and in fact erased this trends of this hard stance on the European Union and as well as the United States. First, I think US has hit China quite badly through the sanction. First sanction, the semiconductors. All right, it has hit them badly on this. All right, and Chinese economy is in a total mess, especially after the COVID-19 lockdown. All right, opening up, do you see any improvement? No. All right, but it did bring a brief price up in the market, in the Hang Seng market on the rally. But after that, the market has a prolonged, I think, 8 months of downtrend. So first thing, what is the thing that shows on improvement, particularly on the topic of AI and military communication? All right, so after that, China and US resumed the military communication line, and AI is the central dominant topic that they will have, and they talk more about the semicon, and it has not shown any signs on the media, but I think it will likely to have softened its stance. US will likely soften its stance based on the performance of Xi Jinping and how he going to talk in. All right, so this is the one from Financial Times. So you can look at it or something. All right, so this I will go through. So Chinese and Hong Kong market, has it bottomed or not? All right, this one I would like to ask you all. You can type in the chat or Q&A, say, I just want to poll. Do you think China and the Chinese market has bottomed? The Hang Seng and the CSI 300 or Shanghai Composite Index? Just make a wild guess, all right? There will be, just put one for yes, you think you have bottomed, or two, it has not. You can just put a poll on it, all right? Put one or two on the chat. Just participate on it, all right? I hope that you have it on this. All right, Gordon say no. Okay, so yes. Okay, so there's only one of you. Okay, never mind. I'll just continue. All right, so I think the market has bottomed out. All right, but how strong the bottom is, I'm not very sure. All right, so based on this, why I think that the market has bottomed. All right, I respect all of your view. So okay, you guys think that Hong Kong market has not bottomed yet. All right, but I think that Hong Kong and Chinese market is likely to have bottomed at least based on this retrospect. First, based on these 3 points, I always like to go in 3 points. Diplomacy and between the Chinese and US currently is a bit warmer. Particularly like what I explained during the softening of the Chinese diplomacy stance. All right, and then the second thing, I think earnings in some of top Chinese companies such as Alibaba and the financial firms, Tencent has beat estimates and top analyst expectation as well as the seasonality of the Chinese and Hong Kong market last year compared from last year and this year. All right, the third point is based on sentiment analysis and bit of technical analysis combined with the wave theory. All right, so based on these 3 points, I think possibly I'll say 70% we might have seen a bottom for the Chinese economy, not the Chinese economy, but the Chinese market. All right, economy, yes, I don't think, I think there's so much room for the economy to see some improvements in the Chinese market. All right. Okay, so this is a bit small. All right, so if you can't see, I'm so sorry. All right, so you can see that last year when there is some sort of like seasonality, and I always like to use fractality, fractal pattern on this. All right, so you can see that that last year there's a V-shaped, very sharp V-shaped bottom, and the 1st of November 2022. You can refer to your chart on Hang Seng Index. This is the time where after the Chinese first jump up, Chinese announced that you will cease off the zero COVID policies, gradually opening up, and then you can see that there's 3 months of worth of rally going forward. But after that, it was met with downtrend. But if you can know that based on the gradient of the downtrend, the Chinese market is likely to be this is likely to be a corrective stance. All right. Why I say so is normally for a strong downtrend to go on, it will be a steeper 45 degrees. So some sort like you guys look my mouse, it will be there'll be a low and then a high and a low and a high and then touching the bottom, or it may break for 40,000. But instead, throughout this month, I think this 6 months of downside, I think no more than that. There were about 10 months of downside. You can see that it largely encouraged in a corrective way, which is what I want to touch on today on the Elliott wave theory. I think I will just go back to the chart later on the highlight chart if there's time on this. All right, so furthermore, I think the downtrend since January of 2023, which I say is rather corrective. And you can see that from the double bottom that is seen on 1st of November, which is this day, it actually has been confirmed. All right, touching the resistance, you can see that today it ended with a bearish engulfing candle. Not a strong one, but I think prices still remains upside. So there is some sort of profit taking. So any correction down, as long as price remains supported between 16,700 and 17,200, I still call it a bottom rebound going into the upside going forward. All right, and you can see that based on my stochastic, you can see that it has oversold on this metal and forming a divergence. Same thing over here, lower highs, oversold cross and the divergence, confirming the upside on this. So with that conform with the momentum divergence on this, so that's likely a rally going on. All right, so but back to the US, I think 2024 Q1 will be crucial period. All right, so first thing, I think the first point I pointed out before has not yet happened. But when big short analysts call for a very strong bullish recovery, I think it's a very euphoric kind of phase. Then it's likely to be a phase where there may be a correction down. All right, so there are 3 points that I think I want to say on this. I think soft landing, all this will be hard landing. All right, this one will be thing. So look closely on how the Federal Reserve is talking. Second thing, I think the Fed are not done with rate hike. This may or may not be true, but rate pausing is likely to be coming. But rate cut, not sure. Although I say that Q3 there is a possibility, but Q1 look out for this. So if then I hit the next series of trade reports, I will just update you all guys again. The third point, the rally in 2022 October is weak, or rather it remained corrective, all right, which I've shown you on the Dow futures as of the last season. All right, so back to this, I think you guys are familiar with this. I think the yield curve inversion actually has very much inverted, and then recently the yield curve came down. This not updated yet. It came down because I think my Bloomberg had some issue, but I checked online. It came down a bit. So what is the first sign is when there's an accelerated crossover above the zero line, then you can see that then there will be a market crash. All right, so this is the Bloomberg highlight recessionduring.com, accelerator for 1, 2, and the third month, and then you can see that 1, 2, 3, third month accelerated up, and then market crash, and then rate cut. 2019. This 2019, all right. Do have some inversion, but after that, I think we brief inversion at zero line, and then after that, came back. Then after that, no COVID happened. Coincident or not, up to you to judge. All right, so this is what we have. You can see that inversion, then market came down, correction, same thing. I think this is a bit okay, I know what happened, but this 09 inversion came up and then came down. Inversion, then COVID happened. Right now we are consolidating. All right, though there is some short-term upside that we have seen recently. So this is what I think we have hit the 35,000 region yesterday really. All right, so we are in this danger zone. So tonight we may see a correction down. All right, so first, another thing is like to say that if you can see that pausing of rate hike, I think you can see that market still going on up further. You can see that based on 2018 to 2020, you can see that when Fed paused in 2019, there's one leg last leg on a rally. So possibility over the midterm, we could see that Q4 having a straight run up, Q1 especially. Then after that, hovering, then correction down. Possible. All right, so that's why I say Q1 is very, very crucial. All right, first rate cut I think is Q3. What I say is Q3 is around September, October period, and then November when election is nearing, there's a very strong possibility. All right, so another thing that I want to highlight why I think that the US market there is a strong rally going on. Normally on the third year of the presidential cycle, all right, the market tend to have a very strong rally. All right, it has been proven on that. You can look at seasonality studies. You can look on that seasonality of the third year of the presidential cycle. You can see that the average rate of return on that year actually exceed far more than the rest of the year itself. All right, so despite there's some correction, prices still move on to the upside again. All right. Okay, so like to touch on today's theme, will be Elliott wave theory. Understand that there won't be enough time. I think, but I still want to go through this. So if there's anything that's unsure, please ask in the Q&A, or you can put in a feedback form, and then Nixon and Wei will highlight to me, and then as I prepare for the 30th November session, you all can know that what to expect on this. All right, so some basic history of wave theory. I'll just talk about it. So if you want, you can just screenshot about it or take a pen or write it down, or you can request me to put a pause on it, and then I'll say on this. All right, so basic of wave theory, I summarize on this on what do you all need to know on this. Basically, impulse wave and corrective wave. All right. Impulse wave is the most important one. Is the main trend. Remember last session I talked about the trend is a trend. This is another session, another version of it. All right. So the impulse wave, take it that is the main trend, and then the corrective wave is just a correction, normally in three-way fashion. So if you know, the very simple way to remember is 5 is more, right? So 5 is normally a structure that consists of a impulse wave, and then followed by a 3 corrective wave. Simple, right? One 5 wave and 1 3 wave will complete one phase. Means that wave 1 and 2. All right, so it will be one phase, one cycle. All right. However, the tricky part will be is based on a fractal nature. Means that impulse wave 1 will consist of 5 subwave, and 3 wave will be A wave of the corrective structure. Sometimes in certain in some literature, corrective wave such as a zigzag pattern can be means that A wave can be a sub 5 wave or sub 3 wave. Means that it's very complex. So I won't go into it. Basically, 1 2 3 4 5 can be A, and then 1 2 3 B, and then 1 2 3 4 5 C. So A B C will be 5 3 5. All right, remember this. All right, on this. If you are confused, just let me know in the Q&A. All right, so what are the pros and cons? Can be simple to understand, straightforward. All right. Another thing that I did add in is I will often tell people that Elliott wave can be a chart GPS. You know a GPS, right? It's like okay, you know that okay, it's like okay, based on this direction, I know where I want to go. All right. Based on this blah blah blah. But I know that okay, so if this the subwave of the third wave, right? I know that hey, there is a possibility that there might be a one more upside based on Fibonacci, based on wave 1, the measurement of 2. So maybe I can go down lower time frame, take one more trade, limit my losses, and then right onto the wave to the upside. And when the wave 3 is formed, likely you know that it's not a corrective structure, it's only impulse. So you can buy on the impulse. All right, but at the cons, because Elliott wave can be very subjective. The rules is rather concise, but recently there are a lot of people add in all this 1 2 3 4 5 blah blah blah. But I think a lot of people I think very focused on fitting their way on the wave count. Hey, no, I think it's 5 wave. No, I think it's 5 wave. I think it's corrective wave. No, I think if all the rules match, then you know that this is impulse wave followed by corrective wave, and then there is likely an impulse wave. So based on the big environment, big wave structure, you know what to do next. All right, this is the non-discretionary systematic approach to the wave. So how quantitative and Elliott wave can be matched? I have not found a solution, but I'm closer to it, I would say. I'm still studying it on how to be it. So this time round, I think when I share this with you all, it will be a good time that that I can that we can do it together. All right. So what is the solution? Adapt a rule-based approach. All right. Added wave started with a rule. So we need to start from the rules of the wave theory. All right. So I think today I'm not going to cross into much of the thing. All right. I'm going to touch on the rules of an impulse wave. So remember just now I said impulse wave complete of 5 wave cycle. So wave 1, 3, and 5, okay, means they are impulse wave. 2 and 4 are corrective wave. All right. First thing, wave 3 cannot be the shortest wave among 3 and 5, but need not to be the longest. Meaning that if later I have some example that I took over from the classical textbooks. All right, but one thing is means that wave 1, let's say wave 1 is 70%, wave 3 is 70%, wave 5 is 50% of the length of the total length. 70%, 50%. This is valid. All right. So means that you either can measure the length or use a box and measure, hey, is wave 3, and then you see that wave 5. So means that either wave 1 or wave 5, or the best wave structure is wave 3 is the longest. All right. But it need not to be, but I prefer it to be the longest wave. All right. This one rule. So another thing is this wave 2. Okay, so I think these 2 rules are very easily for those practitioners making a mistake. Even though sometimes I need to cross back against this rule. All right, this rule I would I study it by heart, but sometimes I do refer it when I need to make a call or make a analysis. All right, wave 2 cannot cross the law of wave 1. Meaning to say, wave 2 is normally the corrective wave, right? So if it goes down, all right, normally it cannot pass through a wave 1. So if we pass through a wave 1, all right, means that it's not valid at all. All right, and wave 4 cannot pass wave 4 means another corrective wave. So after finish wave 3, if there's a large wave down and it passed the high of wave 1, likely that 1, 2, 3, right, is likely to be a corrective wave already. All right, this is the one of the rule I use it frequently to decide whether it is corrective or impulsive. This is a rule. All right. Then we find it to end with momentum divergence, overbought, oversold, or divergence. If you are familiar with using RSI, if we cross above 70, 80, cross above, and then there's a tick down, that means that it's overbought, and then or oversold. So if wave 5, you see a reversal candle, maybe the higher highs within a subwave, and then it shows a divergence. That means that the wave 5 is completed, looking at a major correction already. All right. So this is what I have on this. So you may want to take picture. All right. Okay. So first thing. Okay. So anybody can tell me why this wave count is incorrect, right? You can type in the chat while I explain. All right. Don't worry about it. All right. First thing is wave 5 is the longest, and then wave 3 and there are 2 mistakes I spotted. And then actually wave 3 and 5 you can say that is equal length, but it cannot be the shortest, right? So either 5 had to be even shorter or 3. Why this is incorrect is because wave 4 has already passed on the high of wave 1. So this is rather much of a corrective wave, or this will be a complex and a diagonal wave on this. Right, second one is why this is wrong is first, I think wave 5 is longest, wave 3 is the shortest. So that incorrect. Excuse me. Right, so correct counting, why is this? Is because this is subwave, so wave 1, 2. Within this wave 1 and 2, then pass it, and 1, 2, and 3. All right, this is correct counting as well. 1, 2, 3, 4, and 5. All right, this one is because definitely wave 2 has passed on beyond the count of wave 1. So understand this on this. Do you all need time to let me know in the chat if you need time to screenshot? If no, then no one answer, I'll just move on. All right, just give you all a few seconds. All right. Okay, just want to ask you all, can I move on, or do you want me to just hold on? Let me know, please. All right, thank you. Okay, since I think people are okay, so I shall move on. Okay, okay, one more minute. Okay. Oh, can I repeat? Of course, sure. All right. So okay. So based on the rule, all right. Remember that there are certain rules, right? On this is let me see. All right. Impulse wave 1, 3, 5 are impulse wave, 2 and 4 are corrective wave. Wave 3, remember all these wave 3 cannot be shortest among the wave among 3 and 5. Among 1, actually this is a typo, among 1 and 5, so sorry. All right, but need not to be means wave 3 cannot need to be the longest, but it's best that wave 3 is the longest. All right, it's the strongest and longest, because wave 3 is normally the strongest wave. Wave 5, if usually the strongest is happen in commodities. If there's a strongest wave 5 equities, means that this one is an end of terminal wave already, which I can show you on Dow theory and the steep of angle. I can show you later. All right. Wave 4 cannot cross below a high of wave 1, and then wave 5 need to end with a momentum divergence. This one I'll show you with the light chart later, easier for you. All right, so these are incorrect counting. Why? Is because wave 4 has already dipped below wave 1 on this retrospect. All right. Okay. And then wave 3, 4 deep down, and then there's a rebound on this. Incorrect counting. Why? Is because I think wave 3 is actually the shortest wave. Wave 5 is the longest, and then followed by wave 1. So this is incorrect. For this correct counting is because main wave and then sub wave count. On this. That's why this is considered a good wave count. Correct counting 1, 2, 3, 4, 5. First rule, wave 3 is not shortest. Wave 4 did not cross wave 1. Wave 2 did not cross below. This is incorrect. Is because wave 2 has crossed below on this. I hope you all understand on this, and then let me know. All right. And then if you still have any question, type in the Q&A, and then I will just answer you all later on during this. All right. So basically, our wave theory rules of a corrective wave. So hang on. There will be a recording of this, so you can hit. Nixon later on will share on this before I go on the Q&A. I think Nixon will let you all know. So so the first thing, corrective wave consists of 5 subwaves or 3-wave structure. Complicated, and I will explain why. All right, so it means that A, B, C. So is if you see that A has a 5-wave down wave, like down wave, 5-wave correction, they are called zigzag. All right. 3-wave corrector structure, more common, I call it a flat. All right. And I today I won't go through double 2, 3, triple 3, all this. Okay, so this is the example finish wave 5, 1, 2, 3, 4, 5 sub wave. All right, now all these must be valid. All right. Okay, then you get 3, 5, 3, 5. So 5, 3, 5 normally are a zigzag market. All right, if a bear market, if this one is down, 1, 2, 3, 4, 5, A, B, C. All right. Okay, this is also considered a sub impulse wave. Okay, I know this is confusing, but it can be considered it as well. All right, regular flat. Okay, so this is the flat. All right, so regular flat. Today I only touch on regular flat. There are 3 kinds of flat: regular flat, expander flat, and running flat. Complicated, and I will touch on regular flat. So they normally are in a 3-wave structure, and then you can see that what is their commonality. All right, is they are often in a corrective structure. All right, means that if it's a flat, C wave must be in a 5-wave downside. So this one quite hard to see this. I'll explain why. All right, so these are the question answer, and then before I go into live charting, I will pause my sharing and then let Nixon take over. So Nixon, I'll pass it to you before I go into the Q&A. Thank you.
All right, thanks, Viren. Okay, so short break. So Viren mentioned about recording, right? So I just want to share that point. Let me go back my slide for that. All right, so you can see this is the learn from the pros landing page. So let me also share the URL there. Alternatively, you can also just scan the QR code. So Viren's recording will be put up when it's ready, will be put up on the page. And you can always come to the page to access the recording, as well as the other recording from Kong Hao, his Market Talk series. But do take note that there will be no sharing of recording for Ho Sing Fu's session due to a copyright issue. So only Viren's session as well as Kong Hao's session will be shared on the page. So for those who are interested, and also if you want to register for any upcoming series of webinars under Learn from the Pros, you can always go back to the page and then you can find the registration link as well. So with that out of the way, I just want to remind everyone that we hope to get your feedback as well on today's session. The feedback is very important because it allows Viren and us to also know how the session went, and also as well to know what topics you are interested in, so that Viren can also fine-tune his session to meet your needs and wants. So allow me to share the link on the feedback as well. And of course, the feedback is very important for us as a company because your support is important for us to continue running the Learn from a Pro series of education going into next year, so that we can continue to bring this series of free webinar by market expert to you. So do take some time to just complete the short feedback forms via the link. So with that out of the way, I'd like to just pass the session back to Viren for more question and answers. Yeah, please go ahead.
All right, thank you, Nixon, for the sharing. Okay, so your feedback is very important. So please let me know. So and then Nixon will let me know how's the feedback like going on. Is it am I a bad guy? If I'm bad, just say I'm bad. I'm totally fine with it, and then I will think of ways to make myself improve on the mode of delivery on this. All right, so these are the one that so these are the wave count that I plotted out for the Dow E-mini. So far you can see that that I last month was on this, and then there's a rally, and then I think that that ABC, I think if I mentioned that if this don't cross, there'll be one more downside, but I think the downside is likely to be supported at 32,000 region. All right, so it did, and then it formed a very strong rally. On the side note, Ichimoku is showing a very strong clear uptrend on this as well. All right, so I believe that last week I mentioned that NVIDIA, and then I'll touch on Tesla, all this on the trend itself. All right, so this is a brief introduction of how I use the wave theory to see across. So why I think that is basically you can see that the larger AB. All right, this is very much corrective, and you can look at this first thing. All right, later I'll go on to using S&P 500 as a naked chart to go through. So this is very much like a 5-wave WX and Y. or you can look A, B, and C, a larger wave. All right. Why I think that this is or 1, 2, A, B, and then C. Because 1, 2, 3, 4, and 5, and then 1, 2, 3, and then A, B, C. Or you can see 1, 2, 3, 4, 5 on this number X and Y. So the last leg of this last leg of June, right? Why I think that this is the C wave. This is actually a version of flat itself, corrective flat. Why is because it formed in a three wave, and then last on a 5 wave. All right, same thing. 1, 2. This is largely more on C wave as well. If you are A, B, and C, because 5 wave. But there are some pros because this actually cross it. So that's why I think that this is the first level A, B, and C on this. All right, and then last leg on wave Z, also a sub C wave. 1, 2, 3, or 1, 2, 3, 4, and 5. And then this is the first leg of impulse wave, and then some more this last leg this as well. So there's a lot of rules of this. Sometimes I will need to go down on the subway to see, and then see whether is it. But this is definitely a flat from 14 December all the way to 6th of March 2023 is definitely flat on this. All right. So if you understand this, if you roughly understand, I don't expect you to understand everything. Let me know. Please type in chat. Anything that you're not sure, just put in the chat. All right. I try my best to help you on this. So, okay. So let's go through. Okay. So Elliott wave normally started, right? How the easiest is to start from a larger time frame. All right. Unfortunately, currently I do not have access to Bloomberg, and then my data is limited. So what I can recall is this actually we start from this is actually Elliott wave. You can see that if I'm going to do impulse, there's an impulse wave, and then impulse there's often a phases. Impulse wave phases. You have like you can search it online. You can super cycle, cycle wave, then followed by cycle wave, and you have like primary phase, and then followed by intermediate here, then minor, then sub minor, blah blah blah, all this. All right. Okay, so and all this. All right, so let's start from this. All right, dot-com bubble. All right, and let me explain to you why this is actually A wave, a B wave, and then a C wave. And let me show you why this is a flat. All right, so if I can, I go to the weekly chart. Okay, so if you can see that from 20 March, you can see that let me put RSI. All right, you can see that based on this, you can see that from this stage onward, you can see that the momentum for RSI has been down, right? While this is trending up, means that the 14 weeks, you can see that it has been trending down, all right? And then overbought, can see subwave, overbought, and then it came down. And the last leg of wave 5 is rather corrective, and then it came down already. So if I'm going to start from here, or 1, 2, 3, 4, 5, A, B, C. So this is the first leg of A. All right, A. So I'm going to put A here. So A. Right, B wave is a bit tricky. All right, this look impulsive, but and I'll tell you why this is why this is a corrective, even though this is impulsive first. The next clue is on March 2009. You can see that from 07 to 09, this one is actually a C leg wave. This. All right. Okay, so A and then B. All right. B and then C. So B wave, you can see 1, 2, 3, 4, 5, A, B, C. Firstly, maybe I can take it at 1 with 1, oh, 1, and then count 1, 2, 3, 4, 5. You can see that I couldn't find any. If I'm going to use a Fibonacci, I couldn't have a 1.6 on it. Means that wave 3, first phase 3, typically I prefer it to touch 1.618 of wave 1 and 2. All right. And then secondly, right, it did not touch double top, momentum divergence, it came down. So even if I want to say that, this is wave 4, but remember the rule, it cannot cross below. All right, so I drive back and then I do it on 0, 1, 2, 3, 4, and 5. Momentum divergence, do you see oversold? And then momentum divergence over here. All right, this is a very good way of understanding and then a V-shaped bottom. This sign, all right, is very close to what the Hang Seng is showing. All right, later I'll show you on the Hang Seng index as well. Okay, so A, B, and C. So this is wave C. Okay, all right, momentum divergence, and then after that, 2009 onwards, you know, the rest is history. All right, and then I'll say that, right, during the phase of 2009, the trend, remember the uptrend line and stuff like this. Okay, I think that is much more healthy on this. All right, this is definitely an impulse wave, but it's the last wave. Why I say so, right, is because let's go back to our money chart. All right. So roughly, you have known that why I'll use this as A, B, and C, and then after that, this 1, 2, 3. So remember, there's this one example I have is 0, 1, 2, and then I'll say I'll go in 1, 2, 3, 4, 5. All right. So or I can say that this is wave 1, 2, and then there's a possibility that we might go on to this wave, sub wave 1. So, and then later I'll tell you my conclusion of what I think. Right, A, B, C. So this is actually the whole thing of this is actually an flat. This is actually expanded flat formation, which I think over here I have shown it before here. All right, this is a Dow and S&P 500 have no quant on this. So 4 and then 5. So this with 3, 4 and then 5. All right, but if I want to do it 3, 4, I'll think a 5, A, B, C, and then this 3, this first leg of wave 1, and then I don't have full data, so that I cannot explain certain things. So expanded flat, and then this last leg of wave 5. All right. Why I think that this leg, right, is a last leg, right? No, remember that that always there's a divergence. All right, it do have a divergence. All right, wave 5 normally, whether it's sub or major, it do end on this, and then there's a divergence. All right. So now then, this one is A. I think B is here, or maybe there's one more leg up. So this may be this is confirmed a flat already. All right, and then it may go up to 5,000. All right, next year between let me see. Sorry, let me see which one. Let me take away the 1.113. Not really an important number. All right, so where is the resistance? 1, 4866, and then 5198. So this is based on my, I don't know if you agree with me, but based on the wave finding, based on the wave structure for a major trend, all right, there's a possibility that this one will be the flat. So if this is wave 5, and possibility or this could be wave 3, and then wave 4, possible, because 1, 2, this is expanded wave 3, possible. You can see that before any correction happens, the steeper, there's always a steeper angle. All right, and then this time round, there is, all right, steeper angle at the late stage of the uptrend, not a good thing. All right, I can see that and then correction up one leg, and there'll be a crash as well. The correction followed by a correction, and then next leg up, a very strong leg up. So based on the up leg of 4th of Jan 2016 all the way until 2nd of Jan 2018, 2 years period, you can see that we went very straight up and then followed by a correction. After a first round of correction, A, B, and C is completed, is go followed by expanded flat, straight up and down again, and then a very short straight up. So based on the structural nature, based on the wave theory, based on the rules, I come up with there's a possibility that the bull market will start on again, and then push it up, and then touch 4866, 5192. All right, this is based on it. Okay, so let's go on to the weekly chart. Possible. You can see that very gradual, and then you can see a very spike up, move down, and then a very spike up, move down. This is the steepest of all. All right, you can see that the gradient has been steeper, and steeper. I mean, this is based on my visual. I do not know if you agree with me or not. All right. Okay, so far, any question? If you are confused, please let me know you are confused. I try my best on the next session to simplify it. All right. You can type in a Q&A if you like, or the chat. All right. I'm so sorry if I do not explain it well. Forgive me on this. All right. Let me know. All right. Okay. So before I go into the Q&A, I know that some of you want to know about the stock pick. I can use the stock pick as well to talk about the market outlook as well. All right, so while I explain on the Dow, anybody has any future, any wish to find out about the stock pick, be any stock, Singapore, Hong Kong, US. All right, let me know, and then I think we still have time. Just type in the chat. Let me know. All right. Okay, so for this, you can see that A. We can see that B, which I say, so there's a possibility that A, B, and then this may be 1, 2, and then up wave. So B wave may not be completed yet. All right. So A, B, and then C, and then we have A. We have one more B, and then C, go down. So maybe if we look at the larger wave count, okay, I better use the thing. So you can say that this may be B, but because of this smaller corrective structure, it's a bit confusing. Definitely this is not an impulse wave, because if this wave 1, it has already crossed above the support of this, the low of this, right? Or you can use this. All right, we have already crossed below already. All right, and then there's a rally up. All right, so and then the it's not as steep as it is. So I'll say A, B, this sub 1, 2, 3, right? Perhaps there's one more wave up. There's one more wave B up. All right, so 1, 2, 3, 4, and maybe 5. All right, I don't know. All right, but definitely based on a larger count, I always go infer from a larger count. There's a possibility of one more wave up to 5192 before correction now. All right, so that's all for my earlier wave session. All right. Do you have any question? Do you all have any question on the what you call it? Any counters, any stock pick that you would like me to ask? If not, I will just end of the session if there's no question. I give you all some time. All right, you all have any question? Type in the chat. All right. Yeah, just give you all a few minutes. Oh, STI. Okay. Okay, I have STI. Okay, so for STI, also I use wave theory and correctly point out on the okay, STI generally. Okay, I use the larger time frame. All right, cleaner chart. Okay, so STI generally, this is very much corrective. This is the first leg A, B, and these are impulse wave, and then follow A, B, C. Okay, see that corrective wave, right? These do look like what is likely to develop in the Dow. All right, possible. All right, and then C leg 1, 2, 3, 4, 5, C. All right, so A, B, and C. And then we have A, 1, 2, 3, 4, A, B, and then we have the C wave. All right, so right now it's a tricky one. Based on this, I thought that this is wave 3, but no. Because it did not go through this. So this is largely, if you want to force it to be an impulsive, yes, that is A wave already. Because this is not an impulsive, this is definitely not an impulsive. So, but I will use it as a A wave, B wave, and then there's one more C wave. But based on this, I think the B wave structure is likely to be more complex. So you get A, B, and then you have 3 more waves. So this is W, X, and then Y wave. So there's one more leg up to test around 3004 before a correction happens. All right, so moving back to I use a wave count, right? There's always one thing that I always use. If this is a corrective wave, this is W, X, because in 3-wave fashion, right? So and then the last leg of wave Y is more like 1, 2, 3. This is also you want to say 1, 2, 3, 4, 5. So this is a complex WXY, extended flat pattern on this. So I think that based on STI, there will be one more upside. All right, because it just finished the wave C and is at 3040 and then it's going to break. I think early breakout correction down. You want to measure this leg 50%, 61%, 81.8%. It's a very good retracement, and then a higher low. Technical analysis, price action suggests that there will be one more upside. So therefore, there's a chance that price is going to reach 3290 to 3320 going forward on this. All right. But any more questions? Sorry. I hope I answer your question, Nick. Let me know if I answer your correct question or let me know. All right. So if there's no question on any stock picks or what, I shall pass my time to Nixon. I know today is a bit complicated, so sorry about that. And this is my first time delivering on this. I don't know, Nixon. After listening, are you confused or not? Let me know also, Nixon. Yeah.
I think it's quite a complex topic.
Yeah.
With
Yes.
So it's normal, actually, especially if you're first time hearing about immediate wave, it can get very confusing. So I think we need to probably expose ourselves a bit more. And I think there's also opportunity here. So I'm going to just share my screen now.
Sure. I shall stop sharing.
Okay. Okay, so first of all, just quick reminder again, we do appreciate you can give us your feedback on today's session. So your feedback is important, so please do your feedback to us. And just to remind you of the upcoming session, on 30th November, we have a Kong Hao session, which is Market Talk. And he's going to talk about the market outlook and looking at the seizing opportunities amid times of unrest and inflation, especially in this time, in the world situation that we are all in. And on the same day itself, this is just by coincidence, unplanned. SGX will be doing a webinar session with Weiren. So this session, Weiren will talk into more in-depth detail about Elliott wave. So for those of you who are interested to go further into what Weiren shared today, specifically the Elliott wave theory, do register for this SGX webinar session. So the QR code is there, you can scan. Let me also share the URL with you as well so that you can actually register on the PC as well. Hold on, let me get the chat box up. Okay, so I've shared the SGX webinar session as well. So unfortunately, both sessions are on the same day. So you have to take your pick. There's I just feel if you want to learn more about Elliott wave, the technical aspect, then go to attend a Weiren session. If you want to hear more about the general market outlook and how this year, I think we're coming towards the end of the year, and how we're going to fare for the coming next year, do attend Kong Hao session, which is also shared as well, the link, but I'm going to just copy and paste again here so that all of you can also access the link directly. So that's Kong Hao session. And so with that, I'd like to bring the session to a close. So I see there's no further questions. So I'd like to thank Weiren for the time and sharing your expertise and insight. And of course, thanks to everyone for your participation as well. We hope to see you at the next session. So see you all again. Goodbye. And have a good day ahead. Bye-bye.
Thank you, everyone. And please fill out the feedback form as well so I can improve on my next session. Thank you.
All right. Goodbye.